Welcome to Cashflow Diary, a podcast where we discuss business, money, real estate, and the sharing economy. As a full-time real estate investor, entrepreneur, and all-around problem solver, I have had the privilege of developing individuals into powerful business owners. And today, the focus turns towards you. Our mission is to help you build your real estate empire by leveraging strategies to grow yourself, your mind, and your wallet. Let's get started.
Jay, what do you think about these short squeezes going on right now?
I was waiting for it.
Waiting for him. I think they present a unique opportunity that you should decide whether or not you wish to participate in or not.
I've already participated.
Okay. Well, then it sounds like I know what you think.
Right.
So that's really what it comes down to is so long as you understand what's going on and what you're doing, have at it. That is my concern. So long as you understand what's going on and what you're doing, then great. Knock yourself out because I cannot blame you for wanting to take advantage of what is in front of you at all.
Yeah, this is crazy. I'm trying to understand everything that Reddit is on, and I think I've got a good grasp of what's going on.
Right. It kind of came to my attention mostly because I'll say it this way. I had already purchased AMC because I was looking at other things. I was looking
That's
at
awesome.
other reasons before started, and then I'm like, well, so yeah. I all I'm going to say is I would take advantage of it as long as you understand it. That's what I care about. If you understand it, then you're good. Because these things, I mean, it's not unique. They've happened before. Now, I don't know if there's been one this big. Like, this is nuts. Like, wow, this is nuts.
I just got in today, so I'll see what I can do.
Yeah, but hey, I totally understood. When a hedge fund or any stock that's publicly traded, it's public information to look up how many shares or what percentage of all of their shares is in a short position. Okay. So two things happen simultaneously. One, GameStop was horrible. They were going down the tank. Okay. So they were being shorted, which made sense. And earlier this month, they made a CEO change because they're fighting to stay alive. GameStop has a lot of fans, the retail store. Those fans are typically engineer types who, well, when it comes to data and research and all that type of stuff, they can do that themselves. There's a hedge fund that has a very massive, as in billions of dollars of short position. So they, when the new CEO came in, that got everybody excited. Well, they got some stimulus money and then they started purchasing not just the shares, but the options. This is where it broke for them. And what happened is because the options are so full of leverage with it, what ended up happening is that you had a situation in which a lot of shares, more shares were being purchased than actually were available, thus increasing the price faster than the person in the short position could close their position. So the brokers started closing positions to protect their business, which means they started buying back the shares more or less on behalf of their client and sending out a bunch of margin calls. I think last week, one of the major shorts had to borrow an additional $3 billion to try to keep his position alive Because they're, understand, you got two sides that are literally fighting for survival for all intents and purposes. And that's what's happening. He was selling short and got caught. And then so right behind that, there's a online group who then realized that, hey, why don't we start looking for companies who have an outsized short position and start buying those. Every time they're closing their position, they have to buy at the new current price.
So buying at the new price then drives the price even higher because the volume goes up.
Correct.
Okay.
Now you're getting it. It is literally a self-fulfilling prophecy until someone taps out and says, I quit.
Okay.
Wow. Literal I quit moment. We'll call it it's like a stock market wrestling WWE situation. That is what we're talking about right now. And if you go to the forum that they're on, it has become more of a let's continue to stick it to them because we can. Because again, there's a fair amount of hate for short sellers, okay, to say the least. There's a fair amount of hate for short sellers. And to say that Elon, for example, doesn't like short sellers is an understatement. He tweeted about it. And because he knows if he tweets about it, more people are going to go buy the stock. He tweeted about it, and a lot more people bought the stock yesterday, thus causing the short sellers again more pain. Thank you for tuning in to the Cashflow Diary podcast. If you enjoyed this episode and you'd like to help support the podcast, please subscribe, share with a friend, and leave a rating and a review. If you'd like to keep the conversation going, head over to cashflowdiary.com to sign up for our email list, as well as check out all the links and resources in the show notes. Thank you again. Until next time.